Hi, Lenore here, and this video or podcast is going to be about problem 1-2b in your book on page 44, excuse me. So here we go, the amounts of the assets and liabilities of Wilderness Travel Service, and they've listed them out. For the end of the year, retained earnings, they give us that dollar amount at the beginning of the year. So this is a company that actually has a beginning year at May 1, and then the end of the year is the next year at April 30th. So this is called a fiscal, F-I-S-C-A-L, fiscal year, not rather than a calendar year. So they've given us this information, and they've asked us to answer these, or to do these three items and answer the fourth. So you'll notice that these items are not in any particular order. So we need to first identify what they are. So anything with a payable last name is a liability. Accounts receivable is an asset. Cash is an asset. This is going to tell us, by identifying what these items are, it will help us determine which financial statement these belong on. Common stock is equity. Fees earned, that's a revenue. Expense, of course, is an expense. Supplies with no last name is an asset. Supplies with an expense last name is an expense. Now, why is this important? Well, for the income statement, we need to list revenue and our expenses. So let's do that. The first thing we need to do is we always need a heading. So Wilderness Travel Service. We need to identify then what we are preparing, income statement. And the last item is the date. So April 30th, 2016. So that's our heading, and please make certain that you always put a heading on every single statement that you create. So the first thing is revenue, and we only have one, and that's fees earned. Let me format this. So fees earned, 875. And if we had more than one type of revenue, we would have listed two and then totaled them, but we only have one. Now we're going to put our expenses. We're just going to list them. So we have miscellaneous, rent expense, whoops, not supplies, that's an asset, but supplies expense. Taxes expense, utilities expense, and wages. You might be wondering, why are you typing these things out when you could just easily copy paste? That is a good question, because I must tell you, it's just force of habit. So now we've listed all our expenses. And because, again, there's more than one, we're going to total that. And it's really easy to do on Excel, but you should always practice doing this by hand. So revenue less expenses is going to be net income. Oop, got a little crazy there. So we always double underline what's important. Revenue less expenses, 200,000. So that is the answer to number one, or the financial statement. We have a heading with the date, the last day of the year, revenue, all our expenses, and then revenue less expenses is net income. So with that, I'm going to pause. Okay, now I'm back. That probably didn't seem like a pause for you. So our next item is preparing a retained earnings statement ending April. So I've put the heading here, Wilderness Retained Earnings Statement, April 30th. So we always begin with the beginning of the year. So we're going to begin with the retained earnings balance. May 1, 2015. And that was given to us, remember? That was in the problem, and that's $145,000. Now, the next piece is we add the net income. Remember, we just calculated that right here. We add net income, and then we subtract dividends. And that was also given in the problem, $40,000. So retained earnings, beginning of the year, add your net income for the year, subtract out the dividends, and then we have the retained earnings ending balance, or retained earnings, April 30th, 2016. So let's go ahead and do that. There we go. We net all those numbers. So we take 145, add that to 200, and subtract 40,000, and we get $305,000. So with that, again, I'm going to pause. Okay, I'm back. And I've added something new to our problem. As you can see, here's the balance sheet. And I've set it up so that all our assets are on one side and our liabilities and stockholders' equity are on the other side. The reason for this is it needs to look like our accounting equation. So assets equal liabilities and stockholders' equity. And remember, we've already calculated our net income, and we've incorporated that net income, $200,000, into our retained earnings statement. So that number is going to be embedded right here. And that includes our revenue and our expenses, which is net income less our dividends. So let's begin. Let's start with cash. So we were given cash, $146,000. We were given accounts receivable, $210,000. And we need to sum that up. Now, if we've done everything correctly, our accounts payable, common stock and retained earnings will equal 356. So let's see, accounts payable is 25,000. And there's only one, so there's no total. Common stock is 35,000. Total stockholders' equity is just the summation of those two. So here we go. Total assets, 356,000. Total stockholders' equity, total liabilities and stockholders' equity, 365,000. So I've done something wrong. Let's go back and check. So how do we find when there's a problem, when it doesn't match? Well, first we take assets and we subtract our liabilities and equity, and we realize, ooh, the difference is $9,000. Well, when we look for $9,000, we see, oh, wow, I forgot this number right here. So let's take out this particular underline. Let's add supplies. Remember, that's supplies because it doesn't have a last name. It's an asset. And now, look at that. The assets, which are cash, accounts receivable, and supplies, equal 365. Liabilities, 25, plus stockholders' equity, which is 340. We got it to balance. So these are the three statements that we were asked. The last question is, what item appears on both the income statement and the retained earnings statement? And that's an easy one, right? It's net income. It appears on both statements. So with that, Lenore out.